I'm going to be breaking down my Euro USD calls for the week.
So on Sunday, I'll just show you for AUD USD. I said we're going to have D15 longs to set up a weekly 1 hour short. And then for Euro USD, I said it's similar to AU. So basically you're going to catch a weekly 1 hour short is the main move, the swing move priority, with D15 shorts nested inside of that. So it's Friday today, so I'm looking for a D15 short today, but a D15 long would have set up that short position, and we did call that long position on Tuesday. So USD potential D15 long coming, and this would be a scalp since the 1 hour has not yet reached plus 60 to consider the weekly 1 hour short yet, so it has to get there. I'm going to go map this for you now on the charts to show you. Okay, so this white line is demarcating the start of the week. This is where we gave the call in the TP Min screener that the D15 long position was coming. All right, so let's review the entry conditions. I've had a few people asking me lately, what is D open? I'm not really sure what to say about that. The daily open is the daily open. You know, it's pretty self-explanatory if you understand how a candlestick is formed. I didn't really think I needed to go into that in my videos, but the daily open is the daily open price. So that's demarcating that price level, and we want the 15-minute price to be below the daily open, the 15-minute wave to hit negative 60, which it did by the time I had sent the alert out into the TP Min screener. And then you can either wait for the 15-minute candle to body close above the 8 EMA if you want to try and get in early, or if you want to avoid any potential hidden divergence, which you can see there might have been a mild regular divergence on this entry, you can then rather wait for the wave to be crossing zero before you actually enter the trade. So my entry on this trade was actually on the zero cross. I knew that there would be a divergence. So that's where I got in. And unfortunately, with this trade, I took profit early. Going into the New York Open over here, we were having the FOMC meeting, the interest rates, and I didn't want to go to bed having an open trade. I wasn't sure what was going to happen, so I'd rather just close my position early. It would have been a 3x, but ended up just basically getting 1x on that trade. But those were the entry conditions for it. So my entry was over here, and this would have been a D15 long reversal. The take profit for a D15 long reversal is the 1 hour. As I said in the TP Min screener, we need this to long to set up the weekly 1 hour short position. So you would have been taking profit on this 1 hour anchor because you'd be looking to enter the short position. I was just scared with the news. I wasn't sure if, it was going to come back and take me out before going up. I've seen horrible wicks on the news, and I rather played it safe, right? So that is the reason why a D15 against the trend trade, we would take profit on a 1 hour anchor, because usually that is setting up a continuation entry on the weekly. So we're going to have a look at that entry now. Right, so this is now the weekly open price. And now we're looking for the swing trade. And here is the entry conditions. So the 1 hour price is now above the weekly open, and then the 1 hour wave is hitting the overbought level. We've taken profit off the long. And then the 1 hour candle has a body close below the 8 EMA, or you can wait for the wave to cross zero if you think that there's going to be a divergence and you want to avoid the divergence. I think the price that you would have entered on either of these would have been pretty much the same. So that would have been your entry for the weekly 1 hour short position. And because we're having continuation shorts on the weekly, and that is because we are trending under the 8 EMA, we're actually looking to take profit on the daily wave going to negative 60. So I'm saying I'm going to exit that weekly 1 hour short position, or it should be an exit when the daily wave tries to go to negative 60. You can use the 4 hour wave going towards negative 60 as a TP1 or a break even for this swing trade. And I'm just going to show you guys, like I always do, this is catching the bottom wick on a daily candle. This is now catching the top wick on a weekly candle, and go have a look. So I've just zoomed into the daily first. You can see we were catching the bottom wick on that daily candle. Let's go to the weekly. And you can see so far it was catching the top wick on the weekly candle. And usually this will be best practice for the flow of the week. A daily 15 reversal will set up a weekly 1 hour swing trade. And then what will happen is you will get a pullback the following day and you'll get another D15 entry with the trend. So that is usually what a good week will look like more often than not. That's what I found in my experience with trading. That's usually how it looks. You get a solid day during the week that sets up the weekly wick. Then you catch the top or bottom of the weekly wick. You ride that and you can re-enter that momentum for another D15 with the trend. And this exit with the trend will be the 4 hour going into negative 60, whereas this entry against the trend was the 1 hour going to plus 60. So I hope that helps, guys, with showing you the calls that I had for Euro USD, and it was similar on AUD because they're correlated. And if you've got any questions, please let me know in the comments. Thanks, guys.